Here is a riddle for a prop firm trader. If you're trading a prop firm, is it better to make $500 plus $500 plus, let's say, $200 plus $300 minus $500 plus $500? Is it better to do it that way to get $1,500 at the end of the week, or is it better to do it like this? Make 1,500 minus 2,000 plus 500 plus 2,000 minus 500 to all arrive at the same exact amount, $1,500. I don't even know how I did that, but the math is mathin'. The question that I want to propose to you, is it better to have larger profits with larger swings, or is it better to have smaller profits with smaller swings? As a prop firm trader, a lot of people get caught up in this idea that you have to make a lot of money every single day, right? That I need to make $10,000 in my prop firm account when I first start trading. Well, a lot of people don't do that. What they do is they make $5,000 on day one, then they lose $3,000, then they lose $2,000, and they blow the account. Why is that? Why do they lose so much? Well, to have the ability to make large amounts of money, you have to either size up aggressively, you have to take more risk. So you're going through a larger kind of swing, a larger swing in terms of the emotions, your P&L, and your consistency. The number one secret to getting payouts consistently is to trade consistently. So if I'm able, let's say, I want to make $2,500. I make $2,500 and I have to trade for 7 days. Well, all I need to do is make $357. So basically $350 a day times 7 would get me right to where I want to be to hit that profit target to then get a payout. If you have a 100K account and you need to make $6,000 and you have a 7-day period, on average, I can make $850. But let's say I make $1,000, $1,000, and now I'm up $3,000. Now, if I lose $1,000, okay, not a big deal. I'm still up $2,000. All right, now I add on again. I make another $1,000, another $1,000, another $1,000, another $1,000, and then another $1,000. I'm back there to $6,000 pretty quickly. The goal here is to find some type of consistent profit target for you as a trader. Every trader is a little different. There's going to be traders who really do well, going with big size, taking small profits. And then you have the traders who are better at trading with small size, looking for bigger moves based on your overall strategy, right? The consistency target that most of these prop firms apply to the traders is forcing you to, number one, not gamble, forcing you to hold your winners, or at least, hold on to your winners so that your winners turn into nice profits, and then also forcing you to be consistent with your losses. And I've talked a lot about this before. As a new trader, the best thing to do is to find consistency with your losses. It goes back to the same idea. If I make $1,000 day one, how much do I want to lose on day two to stay consistent? Well, maximum that I really want to lose is $500. So if I'm making $1,000 on average per day, I really want to stop myself from losing more than half of that profit. Because at the end of the week, let's say, okay, I've lost 500 on Tuesday. I've lost 500 on Wednesday. On Thursday, I've made $1,000. And then on Friday, I lost $500. At the end of the week, I am still green. I've only had 2 profit days for the week, and I've had 3 losing days. But still, by the end of the week, I am green. And that is kind of this theory here of trying to get that, 1 to 2, 2 to 1 risk reward, in the sense of, like, if I'm making $1,000, I really don't want to lose more than $500 on the day. If you make $200 every day in profit and you do it 3 days in a row, Awesome, right? You make $600 in 3 days. But then all of a sudden, what do? You lose 500. And now, well, you've only got $100 there. And then on the next day, you lose 500. You're now in the red because your losses are obviously much larger than your winners. If you look at most of the prop firms today, especially funding ticks, pretty much every prop firm has a consistency target. They have a consistency rule. And what that means is if you have 7 days, let's say like I got 7 days of minimum trading that I need to trade to get a payout. If I want to make $2,500, I've got to make $6,000 over a 7-day period, and then I can request a $2,500 profit. So, if I think about it, I'm like, well, I don't need to make $10,000 a day, because what's going to happen? My consistency target is only going to go higher and higher. And now, again, I can only take out $2,500 every 7 days in this straight to funded account. Again, like I don't need massive winners to make $2,500. I just need to hit my $6,000 profit target so then I can request a payout. Forget about trying to make tons of money. If you're trading a prop firm, focus on how to get payouts. And the best way to get payouts is to be consistent. Apex, Tradeify, funding ticks, even TopStep has basically a consistency rule of needing a $200 profit to then qualify for a payout. So you really should stop focusing on how much money, I need to make $1 million. I need to make $10,000. You don't need to make $10,000 because realistically, you can only withdraw $2,500 per 7 days anyway. So trying to make all this extra money is just going to lead to more losses. It's going to lead to more, mental issues, the emotion. If I'm going through these big swings and I'm experiencing big swings in my trading, what am I also creating? I'm creating a lot of emotion. I'm creating FOMO. I'm, kind of like just creating bad habits, I would say, really at the end of the day. You can see here, this is when I got a payout. So I took my payout. I made $106,000, a little over that. I took a $2,500 payout, and then now I'm already back up there. So right now, I've got 4 more days left. I'm sitting at about 50% consistency rule. So over those next 4 days, if on average, I look down here, on average, I make about, that's 1,600 on day 1, 1,300, 1,200. This was a holiday, and then 650, 1,300, 170 was I got a payout, so I only got 1 trade that day. But on average, I'm aiming for $1,500 to $1,000 a day on average, because that would put me where, right? If I'm doing, let's say, 7 days times 1,500, I'm at 10,500. But let's say one of those days is what? One of those days is a losing day, and I keep my loss at $1,000. Okay, great. Now I'm only down that. And then again, let's say I have another losing day. Well, look, I'm only down 8,000. I'm still very much in the profit. The goal here is to find consistency, not just with your winners, but also with your losses. I see a lot of charts, a lot of trader P&Ls where if you look at their monthly P&L, it'll be like 1,300, 1,200, small profit, and then a massive loser that wipes out their entire week. If you have 5 days in the week, like the real goal, at the end of the week, at the end of that 5-day period, is to be green at the end of the week. So I don't want, obviously, I'm on a hot streak right now, but I don't want to have a $500 profit, a $500 profit, and then a $2,000 loss, a $500 profit, and then a $500 profit. Because why? Well, now I've just made it very, very difficult to be green at the end of the week, and it all goes back to our calculator here to doing the math. But if I'm making 500, I'm making 500. I'm up 1,000. All right, now I just lost 2,000, so I've lost 2 days of profit, and then I make another 500. I make another 500. At the end of the week, I'm still pretty much, break even or red after commissions and all that. So again, being able to keep my losing day small, keeping my losers small allows me to just, end up at the end of the week green. It's also, don't think about the losing day as, oh man, I don't want to lose money. I don't want to lose money. No, no, no. Think about it like this. We'll go back to that same idea. If I made 500, I made 500. All right. And then on Wednesday, I lose 300. Okay. That's manageable, right? It's okay. And then, oh shit, I lose 300 on Thursday. But then on Friday, I make back 700. Well, I'm still very much green at the end of the week. The moral of the story here is my losers are staying smaller than my profit days. And again, it's very difficult, right? It's very difficult to handle those losses as a trader. But if you're a new trader, there is nothing more difficult than blowing up your account, having to buy another account, having to go through the eval and do it all over again. That's when it gets very difficult. It gets very difficult emotionally, mentally, when you're going through these big P&L swings. It's hard to focus on the strategy. It's hard to focus on what you need to really do. When you're looking at the chart, if you take a bull flag, let's say you take a bull flag here, I get long here for a bull flag. I'm riding the EMAs. I'm long from the 31s. And I'm like, okay, great. I'm long. I'm long from here. And then I make my target. I have my loss kind of like down there below that entry candle. I'm risking 13 points to make 29 points to break out there. It's awesome. If I leave a runner going and it goes higher, even better, right? It goes higher and higher and higher. And now I'm making 60 points. Right now I got my 60 points in profit because we took a run all the way up there to that pivot point. The problem is if I get into the trade and I let my loser go for 60 points to the downside, well, that's going to be very, very, detrimental for my P&L and also for the mental. I cannot stress enough how important it is to manage your red days. And that's the hardest part, right? That's why traders fail. That's why traders give up, because they can't manage the drawdown. They can't manage those red days because, well, it really kind of takes an emotional toll on you, and it creates like kind of bad habits. It forces you to be like, oh man, I'm gambling a lot more than I should. I'm sizing up a lot more than I should. And I would say most traders have red days because of what? Because of oversizing, because of trying to force trades, trying to make back profits. I see that a lot. They're like, man, I lost $2,000 on Monday, so I got to make $4,000 on Tuesday. And I'm like, well, what's the most money you've ever made in one day? And they're like, in one day, I don't know, 1,000. Let's be realistic, people. If you're a new trader and you're trading prop firms, there's nothing wrong with those small profits. They add up. They really do. Small profits add up. Let's say you make, there's 22 days in the month, and then you make $200 on average. That's $4,000 a month with just making $200 a day. Would that help you? Would that help you get to your profit target? Would that help you get more payouts? Realistically, is it better to have those small profits add up, or is it better to go through those big swings where you're up $1,000, you're down 2,000, you're up 1,000, you're down 2,000, you're up 3,000, you're down 5,000? No. That is not better. That is definitely not better. It is much better to find that gradual increase, right? Because you're taking less trades. You've got a better kind of emotional connection to those trades. You're not forcing it. You're really kind of learning as you go. And I would say that would be the best strategy for any new prop firm trader. Focus on hitting the smallest consistency target that you can in the terms of hey, if I need to make $2,000, to get a payout, well, then don't worry about making 5,000. Don't worry about making 10,000. Just worry about managing, those red days, keeping those red days small, getting the consistency, and doing it over and over and over. Because guess what? At a certain point, you can always size up. If you trade 5 micros and you make $200, congrats, you did it, right? If you do that consistently enough, you get to a point where you're like, hey, now I'm going to trade a mini, right? Now I'm going to trade a mini, and then I'm going to make $500 on those setups. And then if I do that consistently enough, I can then size up to trade 5 minis. And that same exact setup that we took to make, $500, like this setup here, if you make $200 on a bull flag setup consistently, with 5 micros, and then you size up to 1 mini, you size up to 2 minis, to 5 minis. Think about how that is scalable, right? And all you're doing is you're just taking the same exact setups, you're managing risk basically the same way every time, but you're sizing up appropriately over time. If you're a new trader and you get into a brand new funded account and the first thing you do is you put on 10 contracts on the first bull flag that you see, and then you get stopped out and you're no longer able to trade, well, that's a terrible, terrible thing. That's terrible. That might be a good rule too. Like never get into one trade that's going to hit your max loss for the day, right? If I'm risking $500 a day, well, I don't want to risk $500 on my first trade of the day. I want to risk maybe like $150, right? Because like the first trade of the day, it might be a little funky. You might get stopped out. You might have to take a little bit more time to kind of focus on the next setups. But really, consistency. I cannot stress it enough because I always get the same questions from traders. Like, Patrick, I do so well trading in the beginning. And then what happens? After a few days, I get greedy. I put on more size. I size up. And then I blow up the account. So don't do that. Don't size up. Stay the same size until you find consistency. Can I say it enough? Consistency. The secret to being a professional trader, the secret to getting payouts is consistency. $500 a day times, 15 days out of the month. That's plus. I didn't do the math right. But $500, God damn it. $500 times 15 days. That's $7,000 a month. $7,000 a month, people. Those small profits, they add up. Payouts add up. Are you here to make payouts? Are you here to get paid? Are you here to gamble? Are you here to blow up your account? You got a couple of questions to ask yourself. Find the consistency. Keep your losers consistent the same way that you're keeping your winners consistent. And at the end of the month, you'll be happy. You'll be a lot more happy if you just really have that kind of like realistic goal. I think it's much better for traders to have a very realistic goal, to have a profit target that's realistic, in lines with their kind of strategy, in lines with their experience. If you're a brand new trader, be fucking happy with making $100 a day, right? If you make $100 a day, congratulations, you did it. That's awesome. Don't be the guy who's like, man, I got to make $10,000 every day. Well, you're not going to do it, right? Because there's been 1,000 million people just like you who have tried to do that, who have tried to make $1 million in 1 month. And guess how many do it? 0, or maybe 1 out of 1 million. They get lucky, but guess what? On month 2, they're going to lose all that money anyway. So find the consistency, focus on following the rules, whatever prop firm you're trading with, really kind of study the prop firm rules and be like, okay, I got 7 days of trading. I can't make more than 25%. My profit target's 6,000. What do I need to do to hit that target consistently? How do I manage my losses and do it consistently? There it is. Prop Firm Secrets with Patrick Whelan.